Are you very comfortable with where oil prices are at the moment?
I think I'm less comfortable than they are.
He runs an oil company.
He runs an
He's
oil
probably pretty
company,
happy.
but I think, well, let's start. What has driven oil prices higher in the last 18 months has been fundamentally, on one side, a currency move. Weaker dollar helped all commodities. Second, the intervention of OPEC in the market. However, the intervention of OPEC in the market has been, significantly offset by the increase of production in the United States, and that completely reduces the geopolitical premium that we used to attach to oil prices. It is true that inventories have fallen, but inventories remain elevated above the 5-year average. And now that we are starting to see less of a growth in demand, now that we're starting to see basically just a normalization of demand growth in the rest, in emerging markets in particular, and as OPEC starts to reduce the level of compliance to its agreement, I think that what we have is a dangerous market because it's held by that.
I mean, I hear you, but
revenues.
All I hear is massive assurances from Novak, from Barkindo. I'm going to speak to Mazrui later on today as well. All they say to me is, this is different this time. So,
yeah.
And I hear you, and historically, you are absolutely spot on. So why are they going to revert to their bad old ways and not keep to the deal?
Revenues. We need fiscal revenues, my friend. It's, one thing is to adhere to an agreement in a very tough time in which, yes, okay, you think that it's a good idea to curb production for a while, but now that inventories have come down a little bit, now that the US is increasing massively its market share in the oil market, you need oil revenues to pay for the subsidies, to pay for public spending. You need it.
Dan, if you were in the business of having to hedge oil for various different reasons, what would you do for the next 12 months?
I think that if you have, as the airline CEO was mentioning, a hedge position, I think that you will likely see you have a higher probability of seeing lower rather than higher prices.
So you don't want to give away too much in terms of
profitability. You don't want to give away too much. I agree with the fact that we're not going to see probably oil going to $30 a barrel because, the dynamics are different. You don't have an oversupply environment. You have a certain level of compliance at OPEC. But you cannot expect oil prices to continue to go higher as rates increase and as we are seeing, global growth basically not slowing down, but reaching a level. You have almost 70% of the countries in the world at its peak output growth. So, that's what you're going to see.